Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up that report, or actually pull up DailyFX and go ahead and click on Jamie's report and read the synopsis on top about the euro-dollar. Although the euro-dollar pattern is not clear, the pound, Aussie, and Kiwi patterns all suggest U.S. dollar weakness over the next several weeks, if not longer. So let's scroll down. As Jamie mentioned, he's not as confident with the euro-dollar count. I'm going to scroll down to the pound-dollar. Although the structure, altering the structure slightly, the rally from 145.54 is probably wave 4 of 3 within a 5-wave decline from 211.60. Significant resistance does not begin until 160. So again, Jamie's pretty bullish on the pound dollar, but I'm going to go ahead and pull up the charts and get to those charts, and the pound dollar will be the last chart that I go over tonight. The first chart is the euro dollar. As I mentioned yesterday, there was a nice entry on the back side. If I zoom in a little bit here, hopefully you can see this at home. There was a nice entry here on the back side of the former resistance line that did act as support. I mentioned yesterday that we might wait on the sidelines for a clearer entry, maybe on the long side here. As Jamie was mentioning, he's bullish on all the other pairs in terms of the pound, the Aussie, and the Kiwi. The structure is not as clear with the euro. So moving forward, what we might do, as I mentioned yesterday, to wait for the dust to settle. What I did, just draw a simple support line, just connecting the lows. This is a very steep support line, so the odds are that it will not hold. But again, these are short-term trade ideas, and also the fib levels. We can add as well, and these are the longer-term fib levels. We can see that the 23.6 and that short-term support line do converge. What I want to do now is actually add or use the very short-term fibs, and this is a little more relevant to shorter-term trading here, using the low, the 11:25 low. That's the 9 a.m. candle, and drawing the fibs like that, but using the longer-term in relative terms support line, and then looking for an entry. The 61.8 is at 129.08. My ideal situation would be a slight break beneath this support line and having a bullish bias, a very short-term bullish bias against that 61.8 fib level near 29.08. Next chart is the dollar yen, and this is the support line that I've been the resistance line, excuse me, that I've been using. I mentioned yesterday that there was a breakout, and this is the pair that I was trading yesterday. I actually entered at about 96.25. Then I did exit, and this is a very important aspect of trading in terms of exactly what time the market is making certain moves. And let me zoom in here just to get a really close view. I never look at charts with candlesticks this thick, but I want you to be able to see this at home. I entered on this candle here at about the 96.25 area, and then I did exit before the 4 a.m. candle started. And the reason I do that is just because at that time of day, volatility increases. So the chances for a reversal have increased. And I don't really pay attention to news. I'm sure you've noticed that. It really doesn't matter, GDP, Mickey Mouse's birthday. It's all the same to me. It's really not relevant in terms of how I trade the market. I believe that every fundamental factor has been discounted a long time ago, especially in the currency markets, which are incredibly efficient. Anyway, but I did exit, but then I did get a little greedy, and I did enter again on the backside of the resistance line, and I wanted to mention how I exited this losing trade. Again, because learning how to lose is the most important aspect of trading. So I did enter when this candle here opened, and that would be the 5 a.m. Eastern Standard Time candle, and then like clockwork, as soon as I entered, the pair dropped, and it dropped rather fast. And that's exactly what we should prepare for when we enter trades. We should expect that at the moment we get in, the position is going to move against us, and that helps us to manage our risk. So what did I do? I initially set a 50-pip stop. I believe my entry was 96.30 and a 50-pip stop at 95.80. But what I did is I wanted to wait for this candle to close here to see if prices can get back above that resistance line. They did not, and I exited on the close of this candle right here. My exit was 95.80. 89, and I lost, I believe, about 43 or 44 pips. I think 43.5 pips to be exact. But again, that's what I did, and then I'm just ignoring this line now. Actually, I'm going to take this opportunity to remove this line, bring up the daily chart, and redraw the line on the dollar yen. And let me zoom out a little bit to get a clearer short-term resistance line on the pair. As Jamie has, Jamie's been spot on with this pair, and this is the line that I would be using off the daily chart. We could see we had a brief close above the resistance line, but then yesterday's candle was rather hideous. So that's a bearish engulfing pattern. What I would suggest now moving forward, again, this is the daily chart, is maybe an entry on the backside of this resistance line. Again, this is one of those this is a very short penetration, so I would continue to use this line and maybe look again for short trades on the back end of this resistance line moving forward. And this, again, once again, I did switch to the daily chart. The Kiwi dollar, as I mentioned, I kind of taken that off my radar screen. Aussie CAD, as we were speaking about yesterday, John Kicklighter's report, looking for an entry near that 78.25, 78.15 area. Prices did get down. Not sure if you did get an entry. They did get down to about the 78.50 area, and we could see that prices did rebound off there. So again, and we could see that very clear range on the pair. And if you want to, take general areas, it really depends in terms of your exact risk parameters, what you're using in the trade. So if you want to condense the lines a little bit and look for entries along that line, along those lines, and using general areas, like for example, using the 78 figure to about 78.50 as the general area of support, and maybe the 80.75 to 81.25 area as general resistance for this range moving forward. The last chart is the pound dollar, as Jamie was mentioning. This is the hourly chart right here, which shows the rally from, I believe this is the 143. What's the low here? The low here, 147, up to the high above the 155 figure. So what I have done here is just added a very simple support line to the pair, as well as the fib levels for the rally, because I don't want to enter here. Obviously, things have moved too much. So what we might look for, similar to the euro dollar, is a retracement, and I like the fact that the 50% fib and the short-term hourly support line might converge just above that 151 figure. So I know it's about 300 pips away right now, but it's something to keep on the radar screen. Volatility has been very high, so a 300 pip move over the next day or so is certainly not out of the question. So keep an eye on that 151 area as potential support for the pound dollar. We might enter just above that area with a stop 50 pips or so, or we'd exit 50 pips or so beneath it and exit on a close beneath the support line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.